Hey everybody, it's your girl Sharice from Star Communities Inc. with another YouTube video. I just came to you guys because I wanted to be able to answer y'all questions, and I just want to say thank you for watching my YouTube channel and liking it, subscribing to it, and sharing this with a friend. I appreciate all the help that you guys give me. And in return, I want to be able to give you guys all the help that you guys need because I know how important it is, especially as a new investor. So I created this document here that I have on the screen because there was questions in my YouTube page from a new investor that banks was telling no. And I believe his name was Lawrence. So to you, Lawrence, this strategy is for you, okay? Now, this documentation says strategies for investing in real estate deals, right? It says when investing in real estate, various strategies can be employed depending on your financial situation and resources. Below is a concise guide that outlines options when purchasing from a bank, a hard money lender, or directly from an owner, along with specific strategies involving whole life insurance policies, partnerships, and note buying. Hopefully that didn't go over your head, but if y'all have any more questions, you can put it on my YouTube page or you can also email me. My email address is one remodeling remodeling dot SLLC at outlook.com. All of these emails will go towards questions and answers for this YouTube strategy and investing in real estate. Okay, that's my remodeling company. So I wanted to be able to have those emails go directly over there, not to my Star Communities Inc. because I have that for a total different audience of people, clients, that part. So, okay. So now back to this information that I want to share with you guys. Okay. So we're going to talk about purchasing from a bank. Okay, when purchasing from a bank, it becomes a traditional mortgage, right? A traditional mortgage is a loan that you get from the bank and they'll finance you, right? So the sources are conventional loan with favorable interest rates. It ensures a good credit score for better terms. Okay, so now you have a loan that you would get, but this all depends on your credit. Now, everybody don't have good credit. So if you're having a problem with your credit, you can email me again and I'll be able to help you establish good credit. Now, there's ways that I can go about helping you with this method. If not, I have a team of people who can help you. But again, I just want you to know that everything that I'm giving you is a resource and or if not a help that my company actually does. Okay. And you can reach me at my email address that I stated. Matter of fact, I can put that on the document at the bottom once we get finished this tutorial. So anyway, let me keep going. So with foreclosures, right? There is websites that you can go on that actually have foreclosure listings. You can Google it, foreclosures.com, and a bunch of information will pop up about real estate properties that's in foreclosures that you can purchase. Some of them may be for on auctions. Some of them may be advertised from real estate agents. From home websites excuse me, I got to get my words right. That offer real estate and so forth and so on. You'll be able to look it up when you Google, right? So now let me keep going. So foreclosures, look for bank owned properties that are often sold at a discount. And the reason why I say foreclosure properties is because most of the time you can get those at a really good discount. And they have Fannie Mae properties that they offer foreclosures. They have HUD homes that they offer for foreclosure. I mean, you'll find a whole lot of information if you Google it. If you need me to go more into detail with that, email me or put the questions in my YouTube channel and I will respond. And I thank you guys for giving me all the appreciation for the information that I'm sharing. But I'm just here to try to help. I'm not a professional. So if you're looking for professional help with real estate, then you have to seek a professional. I'm just only giving you my strategies, my options that I use when I'm doing deals. Okay. So now let's keep going. Working with a hard money lender. Now, a hard money lender is a really good resource to use. I have used some of them because at the end of the day, the interest rates are pretty good. Now, some of them, they will require pulling a credit report, and some of them, they may not. Sometimes you might just have some type of collateral. I don't know if you have any collateral or not, but this is just me giving you another option for if you're trying to find funding so you can be able to do your real estate deals. Okay, this resource kind of makes it a little easier. So let me keep going. Now, working with a hard money lender, short-term loans. Okay, they offer you short-term loans. Now, they may offer you it for 6 months. They may offer it for you for a year. They might offer it for you for 2 years, but they don't go longer than 3 years, from what I've experienced. Now, I don't know. I could be wrong. Some people, terms and conditions are a little different, but this is just with the hard money lender that I use. And if you want some information on that, again, you can reach me and I can be able to provide certain things to you. Okay, now let's keep going. So it says use hard money loans for quick financing on fix and flips projects. These loans typically have higher interest rate but fast access to capital. Okay. Now, with the hard money lender, yes, they do offer you higher interest rates because they want to make a profit too, and because they know your situation is a little more strenuous than the average person who has good credit and has money. So therefore, they want to make extra money off of you because of your hardship. Now, that's just their terms. That's just how I see it. I'm explaining it straight. No chaser. Okay. So let's go to the next one. Secured loans. Okay. So now we at uh, secured investments. Right. We here. Over here. So you can follow me here. So secured investments. It says okay. Secured investments. I'm sorry, my computer does a lot. So it says ensure that the property has sufficient value to cover the loan in case of default. Now, when they say secure the property, make sure that it has sufficient value. That means that it has to have equity in the property. So whenever you do pull out the loan, get a loan on the property after you finish fixing it up, you can actually refinance and pull the money right back out. So that means you buy a house that's undervalued, fix it up, refinance it, pull the money back out, do the same thing all over again. Okay? But again, just make sure when you're doing that, you got to have equity in the game. Okay? So I'm hoping that you understand that part. So now we're buying directly from an owner. Okay? That's number 3. So it says subject to financing, acquire a property subjected to existing finance, allowing you to take over mortgage payments without formally assuming the loan. Now, when they say take out the mortgage, when they say finance and allow you to assume mortgage payments without formally taking out a loan, that means that the homeowner, right, or whomever you might know that's willing to sign the house over to you, right, and you make an agreement with them and say, okay, I would like to buy this house from you, and in return, what I can do is I'm willing to pay you the monthly mortgage payment so that therefore they can turn it over. Once I finish fixing it up and I refinance it, then I can either go into contract, you can go into contract with them and say when the house is sold, then therefore I'll give you the money, however you guys are splitting it, you can split it, and then therefore you make a profit, they make a profit. And you can continue to keep doing that until you get enough profit, whereas though you don't need to keep doing that type of strategy. I'm hoping that makes sense. So now we're going to own the financing right here. Okay. So negotiating with the seller to finance the purchase themselves, making monthly payments directly to them instead of through the bank. That's what I was trying to explain to you. Now, again, you can get with a homeowner and say, hey, we can make this deal happen, but this is the way I need to do it. You just got to strategize your investments, okay? Just think a little bit differently than you would normally do if you was just trying to get a loan. You got to just have creative thought, creative strategies for financing deals. Excuse me. Yes. So using whole life insurance, I wanted to tell you a little bit about home life insurance, right? Using whole life insurance policies borrow against cash value. Whole life insurance policies accumulate cash value over time. You can borrow against the amount to finance a real estate deal, providing a low interest alternative for a traditional loan. Okay, that's all of this information right here. Okay, so meaning that you can actually buy yourself a whole life insurance policy. You got to have it with terms and conditions that will allow you have cash value, so you can pull the money out of that out of that life insurance policy. Because as you hold on to the life insurance policy, it will accumulate interest. So therefore, that it can be of greater value. You can also take your money, put that money into that life insurance policy, and then you can borrow back from it. There's a strategy for that. But if you need more information about that, holla at your girl. I'm willing to give you the breakdown on that. And if whatever I don't know, I can refer you to somebody who does know. Okay. I'm hoping that that helps. Also, now we got the tax advantages, right? Tax advantages from your policy may be tax-free, offering a unique funding source for your investment. Now, when you purchase a home and when you purchase a whole life insurance policy, there is tax advantages for that. As I stated before, it's tax-free. Okay, so you don't have to be worried about paying taxes on that policy. The only thing you would have to do is if pay that policy back. You don't have to pay the policy back, but whatever you deduct from that policy will be deducted in the end, like if and when you are no longer existing, if that makes sense. Okay, so now let's get to the rest of it. Okay, I'm hoping that everything that I'm saying to you makes sense because you just got to strategize your methods. It's so many ways that you can do it. And again, if everybody is liking this channel, please click the like button, share this with a friend, and also subscribe to my channel. I have more information that I can give. Just ask your questions and I'll be able to answer them. Okay? So now, when it comes down to partnering with a friend or family, okay, now this is fun right here to me. Anyway, so it's called joint venture, right? Joint venture. Partner with a friend, family member, or investor to pool resources, right? These approaches allow you to leverage their credit or capital if you lack adequate credit. Now, meaning you can have a family member, you can have a friend, or you can have a contractor. And because those people may have the credit or may have the money that it takes to do the deal, you might be just the person that found the deal. Your family member might be the one, your family or your friend might be the one to have the money or have the credit. The contractor may be the one to be able to just help out with the renovation processes. So now here it is, you got the whole full team. So if you was able to utilize any of all of them, then you would end up getting the loan because someone has the credit or someone has the money, right? You can even deal with the contractor and say, hey, we have this property, we want this to be fixed up, and everything can go smooth sailing. But again, you have to partner with someone, right? If that makes sense. You find yourself a friend or a family member or an investor. The investor is the one who has money, right? Or know about other properties. Also, the family members or friends, they may have the credit, right? But the contractor, he can do the work. And you, yourself, you can find the deal. Hey, I found this deal, y'all. Look, y'all want to go in with me? Okay, what's going on? Oh, okay, well, I found this property that's distressed, and the owner, hypothetically speaking, want to sell it. So they want to sell it at a great deal, but unfortunately, my credit ain't right, but I'm willing to make this deal happen. If you could apply for this loan for me or for us, and then that way we can purchase it. I got a contractor. The contractor is willing to do the work at this amount, this price. And then at the end of the day, when it's all said and done, this is the return we can make. That's the deal. Okay, I'm hoping that that makes sense. So now you share the risk. Okay, splitting the investment reduces individual risk. Both parties can contribute varying amounts to the down payment and or renovation costs. Now, so even without you having the money and someone else came up with the money, the deal was still you brought the deal to the table. So in return, you create a contract so that therefore that person know that you real. It secures you and it secures them with the job that's going to be done. And at the end, y'all have an agreement to split the profit. That's just what I see. Okay, that's just from what I know. Then buying the note from the owner. Okay, we right here. Buying the note from the owner. Okay, when purchasing an existing notes, negotiate the current owner to buy their mortgage note. This allows you to take over payments without formally purchasing the property. Okay, without purchasing the property, just make an agreement with them, negotiate with them. Hey, look, I know you're about to move. I know you're about to go out of town. I'm just using hypothetical situations, and y'all don't want to no longer live here no more. So look, why don't y'all let me purchase it from y'all, and then we can make a payment plan. It's a lot of ways to do this. It's just a matter of knowing. And again, if you like this information, just click the button, like this, share it with a friend. And I'm hoping that you're absorbing this and it makes sense. I'm here to help you any kind of way that I can. So I'm just asking you to absorb what you got, what you don't know. Just reach out and ask me. Okay? So monthly payment structure. We right here now. Monthly payment structures in agreement where you make mortgage payments directly to the owner, providing them with cash flow while gaining ownership rights. See, that's what I'm talking about. You can actually gain ownership rights by paying them a monthly fee. And then they can say, okay, well, if you give us this amount of money at before or while in this duration, then I'll go ahead and sign the rights over to you. You just strategize how y'all can make that agreement happen, but always have it in writing because again, you don't want to give up money or you don't want to go through a lot of the renovation processes and then they renege on you. So renege means they cancel. They don't want to go through the process. So I'm just making sure you secure yourself with any type of strategy that you did. There's so many strategies out here, okay? So by utilizing these strategies, I'm right here now, by utilizing these strategies, you can expand your real estate investment portfolio even without traditional credit resources, effectively diversifying your approach to property acquisitions. Okay, now, right here is where I'm going to go here. Okay, wait a minute. Here, let me see how I can do this. If I click on this, then that picture goes away. But if I click on this, it shows up. And I can't. Okay. So here we go. So I'm going to put my email address here. Let me see if I can. If it allows me. Okay. So this right here is my email address. I'm hoping that you can see this. So if you need to reach out to me, please do. Okay. Didn't change size. Okay. Well, anyway, it didn't change size. So as long as you can see, that's my email address. You can reach me at that email address, or if not, just respond to my YouTube page. I look at it every day, and I'm always willing to answer questions. And again, I thank you so much for watching my channel, and I hope that this information was valuable. I'm always here to help. And I thank you guys for giving me y'all time and watching this video. Don't forget to click the like button, share this information with a friend, and also subscribe to my channel. I appreciate any help I can get with growing and sharing this information. And with that, I thank you guys and I say good. Have a great day.